Okay, no trend on the markets, just flat on the broader indices, Sensex and Nifty.
Okay, that's Pascal Lamy, Director General at WTO, talking about a variety of issues. Let me welcome in a special guest. Get back to the market chat. R. Amarnath, Executive Director at Centrum Capital, joins us from Mumbai. Mr. Amarnath, always good having you with us. Good morning. Thanks for joining us. Prashant here. First off, can you talk a little bit about where we are as far as the market situation goes? A nice, decent rally, 20% plus. Do you think we are at the point where this market might start to give up some of those gains, at least for the near term?
Yeah, morning, Prashant. My sense is I think last few months we've been looking back with some kind of frustration and looking forward with some kind of fear of uncertainty. I think having said that, I think we possibly made a fear bottom or a concern bottom, a month or so ago. So my sense is that we have bottomed out. That doesn't mean that, it's back to, there are no concerns on the horizons and it's going to be a one-way run. I think two key issues I think one would want to watch for is the second quarter results, which I think would reflect some more of pain that India Inc. is going through. And as I said, the first quarter results came a bit more muted than the expectations also. And the second issue is to look at crude and the US consumer behavior through to the winter and the festive season, which I think is going to be putting some pressure overall. So that's, I think, the two main issues which need to play out near term.
Mr. Amarnath, how do you read the movement in some of these banking stocks especially? Most banks after the RBI rate hike have already gone ahead and increased rates. Everybody knows that credit growth is slowing down. But on the other hand, the hit that most banks saw from the MTM side is unlikely to be there in the quarters which are about to come. So on an overall basis, also given the fact that the BankX is one of the best performers for the past couple of months now, it's up about 40-45% from the lows. How do you analyze, banks as a space? Should one buy them, and from what perspective in terms of time frame?
I think, Prashant, if you recollect, I had said this, last time I was on your channel as well, that, banking was beaten down to valuations which vis-a-vis the intrinsic strengths, if you would measure in terms of, even stress situations, if you had tried to analyze, I think they were trading at discount to those kind of valuations. So my sense is they've caught up a bit on that with this recent rally, but I think there's nothing to really get perturbed about in the banking system. I think everything is fine, and I think with the kind of reforms that are being talked about in terms of allowing access to tier 1, tier 2 capital, etc., I think things should be pretty good, apart from the fact that obviously credit growth is going to slow down a bit, and maybe there's going to be some nudge up in NPS, whether on the retail side or on real estate and other sort of impacted sectors, if you may. So I think pretty much banking would continue to be a overweight sector in our view.
Morning, Mr. Amarnath. Namrata also joining in. What about the big fear of crude? Has that substantially retreated now with the crude prices drop, or do you feel this is a bull market correction and concerns of staying above $140 or reaching $150 plus still remain valid?
Yeah, morning, Namrata. I think our view is that, for the next 6 to 9 months, we are going to see maybe shorter cycles in terms of several commodities. I mean, you're going to see them, for 3-4 month periods, you could think that something is trending down very sharply, but it may not be a secular trend. And similarly, something which, ramps up rapidly in 3-4 months time, that doesn't mean that, it's going to have some explosive blowout pretty soon. So I think you're going to have these volatilities. So in that sense, it's going to pretty much remain a kind of a trader's market, if you will, as opposed to a buy and hold kind of a market for the next 6 to 9 months. And as I said, the two key issues which need to resolve is how is crude going to pan out in terms of not only the pricing and new discovery initiatives, etc., which are being talked about, and also renewable energy in terms of how it's going to pan out over the medium term. Apart from that, is the other key thing is going to be the US consumer and how deep the pain is going to be, because the pain is inevitable in our view, but the question is of the market to sense how deep it's going to be, for how long and how prolonged, and therefore discount that.